Every professional trader you admire, the ones pulling 6 or 7 figures a year, every single one of them, starting with myself, has fallen into the trap of herd mentality at some point in their careers. Whether we started our trading journey when we were 16 or 60, we all have chased trades at some point because of peer pressure, FOMO, or viral trends. I was no different. Before generating over $2 million in profits, before all the certificates, the records, and the payouts, before building my own trading academy, I used to buy when others told me it's a good time to buy and sell when everybody else was selling. And I didn't even realize how big of a trap that was until the market taught me the hard way. Because herd mentality isn't just a bad habit. It's not just something that makes you lose a few trades here and there. It's the silent killer of trading careers. It's the force that quietly drains your account without you even realizing it is happening. If you don't recognize it, if you don't learn from how to break free from it, you're not just risking a bad month or a bad quarter, you're risking years and opportunities that might never come back. We have seen it happen again and again. A trending headline sparks a market move. Wall Street is turning its back on Elon Musk. Tesla stock plummets. Bitcoin panic sells on regulatory fear every single time in the past 10 years. FOMC decisions leading to volatile reactions. And it's the same story every time. Retail rushes in first, without a plan, without clarity. Smart money stands aside, patiently waiting for retail emotions to create the liquidity they need. If you're not aware of it, you're already a participant, whether you realize it or not. So let me ask you something. Have you ever made a trading decision not because your analysis confirmed it, not because your process told you it was right, but because of a viral headline, because of a trending post on X, because your entire trading chat was blowing up with panic or excitement? One moment you are calm, rational, sticking to your plan. The next, you're panic buying at the top or dumping everything at the bottom. And as soon as it is over, regret sets in. You say it to yourself again, never again. But then it happens again and again and again. If that sounds familiar, you're not alone. You're human. But today, we're going to break that cycle. Today, we are going to expose how herd mentality hijacks even the smartest traders, how social media weaponizes your emotions against you, and most importantly, how you can break free permanently and finally start trading on your own terms. Understanding herd mentality. Why traders self-sabotage. Herd mentality is simple but deadly. In behavioral finance, it describes when individuals mimic the actions of the majority. Not because they have evidence, not because they did the work, but because it feels safer to move with the crowd. Our brains evolved for survival, not trading. When you see a crowd running, your instinct is to run too, not to ask why. In prehistoric times, that instinct kept humans alive. In the markets, the same instinct leads you straight into traps. It urges you to buy when everyone else is euphoric and to sell when everyone else is terrified. Following the crowd feels safe, but in trading, it is often the most dangerous place you can be. Thousands of years ago, sticking with the group meant survival. Alone, you were prey. But the market is not the wilderness. The market rewards the independent, the prepared, the professional trader. If you think about it, herd mentality is simply buying when prices are already high and selling when they are low. So it is the exact opposite of professional trading. Instead of riding the wave, you become the wave. And here is the brutal truth. The herd is not just wrong, it is most of the time engineered to be wrong. Institutions and professional traders all rely on predictable retail behavior because predictable behavior is profitable. And whether we like it or not, herd mentality is the most predictable behavior there is. I learned this the hard way. This story happened to me personally. One day, early in my trading career, I was watching CNBC and some anchors were hyping a tech stock like it was the next Amazon. I didn't think much about it. I bought into the stock. Well, at that time, They made a pretty strong case of why it's going to rally in the near future. I didn't know anything about the market fundamentals at that time, not seasonality, not even looking at the futures charts. And to make matters worse, I didn't even do my regular technical analysis. I let the noise overpower my process. And do you know what I was thinking the next few weeks? I did not want to believe I was wrong. I was holding on, hoping for a reversal. Every weekly candle that closes. Maybe next week, I kept on telling myself. Then comes the next stage. I found myself searching online for articles that confirmed my bias, clinching to any positive news to justify holding the stock. That is another trap herd mentality sets. It does not just push you into bad trades or bad financial decisions, it blinds you from seeing the truth once you are in. Truth to be told, I was not managing a position, I was managing my ego. 6 months later, I watched 70% of my investment evaporate. It was not bad luck, it was not a bad company, it was a bad decision made under FOMO pressure. That experience burned a permanent lesson in my memory. Remember this, when the herd is the loudest, the trap is deepest. Social media supercharges the herd. Back in the day, traders had hours, sometimes days, to react to big news. You had all the time you need to think. Now, a single viral TikTok, a trending headline, a meme on X can move billions before breakfast. Social media collapsed the timeline. It compressed emotional reaction into seconds. By the time you even see the information, it is already old. You're not making a decision, you're reacting to someone else's reaction. Speed kills clarity, and when your clarity dies, your process dies with it. Social media is not designed to educate you. It is designed to trigger you. FOMO, panic, greed, urgency, fear, all engineered. The worst part is the loudest voice are not the real traders. They are entertainers. They do not make their money trading. They make their money from your attention. Just look at what happens every time the Federal Reserve announces an interest rate decision. The first candle after the announcement is often extreme, a spike up or slam down, as retail traders scramble to react to headlines. But the real move almost never happens in the first 5 minutes. Smart money waits. They let retail overextend, let the liquidity pile up, and then reverse the market once the emotional players are trapped. The chaos you feel is not accidental, it is orchestrated. Because the faster you move emotionally, the easier you are to control. The moment you start chasing, you've already lost. Market manipulation, not a theory, a playbook. Manipulation in the markets is not a conspiracy theory. It is an operating manual. Take Jim Cramer, for example, a former hedge fund manager, now a media personality. He admitted it openly. During his hedge fund days, he fed false information to journalists to move research in motion stock. That was the company behind BlackBerry. Why? Because good news about a company creates liquidity, and liquidity creates exits. When retail traders panic buy a stock in supply, insiders quietly sell into frenzy. When retail traders panic sell in demand, institutions quietly accumulate at a discount. So in my story, I bought some institutional trader out of his position. He sold at supply, made decent profits, and I watched 70% of my investment get wrecked. That's how the game works. Take Bitcoin for example. A rumor spreads that El Salvador will adopt Bitcoin. Retail piles in. Smart money quietly sells at the top. Price soared to $60,000 in 2 weeks. Bitcoin collapsed 30%. And you know what? El Salvador ended up adopting Bitcoin anyway later that year. You might wonder, how can smart, disciplined traders still fall into these traps? It is not a lack of intelligence. It is emotional hijacking. When your entire feed is flashing green candles, when your group chat is screaming, don't miss out, when YouTubers are calling for 10x moves, your brain does not process it as emotion, it processes it as logic. It feels rational, it feels necessary, but it is not. It is the primal brain taking over. I learned to recognize when my emotions were taking over. My breathing would speed up. I would find myself hovering over the buy button, convincing myself it was now or never. I would feel a rush, goosebumps, a sense that I had to act immediately. Now, when I feel that urgency, it is a warning, not a green light. Emotions are data. They tell you when you're not thinking clearly, if you're willing to listen. When emotional trading feels logical, the trap is already closed. And if you cannot recognize the trap, you cannot escape it. Let me be brutally clear. The only way to escape herd mentality is through real financial education. Not YouTube shorts, not free Telegram signals, not TikTok millionaire routines. I mean structured, principle-driven education. You need to understand supply and demand dynamics, macro fundamentals, liquidity traps, and how they are created, and how to identify real institutional footprints on charts. Because if you cannot think independently, you will always be the prey, no matter how much information you have at your fingertips. Free content might show you a pattern, but real education shows you context. It teaches you when a pattern is valid or when it is a trap. It teaches you to ask who is on the other side of the trade, instead of blindly clicking buy because a line was drawn on a chart. There's a world of difference between learning a trick and mastering a principle. As I always teach you, real trading freedom comes from literacy, not access. How to break free from the herd. So, what is the roadmap to freedom? Step 1. Education over entertainment. Check every source you consume. If someone offers excitement without substance, move on. Good education is not exciting, it is actually challenging. Choose mentors the way you would choose a surgeon. Would you trust your heart to someone based on how flashy their Instagram looks? Neither should you trust your capital to hype. Step 2. Build independent analysis. Do not rely on gurus to tell you when to buy or sell. Learn to draw supply and demand zones correctly. Recognize election cycle patterns and understand central bank policy shifts. Become your own analyst. Build your process before you place your capital at risk. Without independent analysis, you're trapped in a cycle of dependency. Every trade becomes a coin toss based on someone else's conviction, not your own preparation. And when their conviction fades, so does your account balance. Step 3. Master patience. In trading, patience is offensive, not defensive. In 2019, while others overtraded volatile, chaotic markets, I sat out. I waited. I stayed patient. When a clean demand zone aligned with a key macro catalyst, I made one trade. That one trade paid for the entire year. Patience is not weakness. It is strength. It is strategic. It separates the professional from the amateur. Most traders lose money not because they cannot find good trades, but because they force bad ones out of impatience. Step 4. Journal consistently. Every trade you make leaves a fingerprint. Every time you panic bought because of social media hype, write it down. Every time you ignored your plan because the herd was loud, write it down. Patterns emerge when you have the courage to confront your mistakes. The journal does not lie. It reveals who you are as a trader. Reflection is how amateurs become professionals. Follow the herd or lead yourself. Social media is not the enemy if you know how to use it. It can be a tool for knowledge, or it can be a trap for emotions. Every day you trade, you have a choice. Follow the herd into mediocrity or walk your own path toward mastery. At Online Trading Campus, we are not here to flash Lamborghinis, designer watches, or shout empty promises. We forecast, we educate, we build traders who can think independently and thrive. I believe the freedom you earn from independent thinking is not just financial, it is psychological. It is the confidence to move when you're ready, because you're prepared, not because the herd demands it. I want you to think of this channel as a building block in your trading foundation. So subscribe, watch some of our mentoring videos, and if you enjoyed this video and want to see more like it, comment down below. Thank you for watching, and I will see you in the next one.